Hey, people, how are you? How are you? I hope you are having a great time, a great week so far. I'm excited. I'm very excited about what's going on in the weeks. Life is good. I want to break some myths. I had a meeting, but my appointment rescheduled. So I said, let me jump on Facebook Live and educate the world because, man, so I'm just going to wait for you guys to join. There's so much stuff going on in this world, and I feel right now is the right time to educate you on your money because this is the right time for you to take advantage of making sure your money stays in your pocket and you're not giving it away. I know you've been told so many lies about different ways about managing your money. So we want to address that for you, and I'm going to help you with that situation. So let me go ahead and come on here and share my screen and bring up something that I want to talk about so that you can benefit from this because it's so important that you do. So before I do that though, I want to do what we do best, and I want to encourage you because you might save somebody today. You might be able to change somebody's mindset and get them to the path of financial wealth. And everything I'm sharing is things that I'm doing. So please share the video, like the video, share it in your groups. If you have a group that you manage, that you are an admin of, make sure you put this in that group because your members in your group will be so appreciative of you. So I'm going to go ahead and jump right in. Let me share my screen so we could go ahead and you could take advantage and watch some of my, some of the things I want to share because it's so important that I do this video. So let's go. Man, thank you for joining, folks. I see you. Thanks for coming on. So here's the deal. Here is the deal. I hope you could hear me. Make sure you let me know if you hear me. Let me get some love signs or whatever other great things. Let me know you could hear me. So here's the deal. You've heard the fact that you need to make extra payments on debt, right? Sounds great. You need to pay off your mortgage. Sounds awesome. All those things are great. I used to tell people that until I started realizing, folks, you know what? That's a big situation when that comes, especially when it comes to my hard-earned money. Man, I work hard for my money, man. Woo! Oh, God knows I do. But check this out. I need to make sure you are keeping a lot more of your money. Don't make mistakes that so many people are making. And also, I wanted to do this video because I have so many folks in Nigeria, Kenya, Ghana, all over the world, because now we're in social media, people can see you all over the world. So I know so many of those folks, just like me, growing up in a country where there was no credit or any of those things, we pay cash for everything. So I want to help you with that. I want to show you a different way of using your money and building wealth for yourself, because we never think about this. We think, oh, I'm going to do what the banks say, but the banks is going to give you information to benefit the bank. They're never going to give you information to benefit you. So you have to go figure it out yourself. Now, here's what I want to say. If everything you know about money that you always thought to be true about money happens not to be true, especially when it comes to making extra payments on debt, if it's not true, when do you want to find out about it? Do you want to wait till you're 65 to find out? Or do you want to find out right now? Let me know. Let me hear your thoughts on that. Again, please share the video, like it, and do it. So let's go ahead and address the first elephant in the room, mortgages. Now, I'll tell you this. I have enough money right now to pay off my mortgage. I could pay it off right now. I could write a check and pay off my mortgage, but I choose not to do it. You know why I don't want to do that? Because I'm waiting for an opportunity that I could use my money to make more money for me than me giving it to the bank. The bank is saying to me, so let's start from the beginning. Let's say you went out and you went to traditional bank. That's what I call them, traditional bank. It don't matter which bank. You went and you got a loan, awesome loan, 30-year mortgage. So we're going to take this out. We're going to say, let's say the bank says, you walked into the bank. Actually, you know what? Let me bring this picture up for you first, because I want you to understand it as we go with the flow. So let's bring this picture up. I want to break this down so well so you could be excited about life and the mistakes that people make that we've been taught to make. So now you could get excited because I'm about to change that mindset for you and help you get away from the box. Because if you're in that same box all the time, you're going to lose all day long. So we're going to get away from the box and do something different, because that's why you're an independent thinker. You are here to succeed. I'm going to give you this information. It's going to help you. So let's go ahead. So what you're seeing in my screen right now is what I call your personal economic model. It's pipes, it's water, it's all this stuff, it's tanks, it's right there. So we use it so it could make sense to you. So here's what goes on. So when you want to buy this beautiful house, this is your dream home. You want to buy this house. You're like, baby, I want to buy a house. Your baby says, baby, let's do it. Let's go buy a house. And you say, okay, cool. Let's go make it happen. So let's come in and we go to the bank. Now you and your baby, you've been investing. You've been saving money. You have money in your 401k. You have some stocks money. You have all these great things happening with your financial bucket. All this money there that you've built up for you and your baby. All right. So you have some stocks. All the yellow is all stocks. You also have 401k money. So you like feeling very sexy with yourself and you and your wife. You're loving each other. That's awesome. You might be single too. Oh, and then you also have cash in your savings account that you guys have been building up. You've been putting away because you listen to Susie and Dave, and they say put money in an emergency account, put it in your savings account for 6 months or a year. You've done that while you're earning 0.25% interest rate. Man, what a great advice from Susie Allman and Dave Ramsey. You earning 0.25% and they tell you to put it in your savings account and you are excited about it. Woo! Well, let's leave them alone for now. Continue listening to me. Now we come here and we'll do this. We won't buy this beautiful house right here. And the bank says, okay, how much do you make? Because remember, when you want to buy a house, what does the bank say? They're going to look at your income and they also look at your credit. And they say, based on your income, based on your credit, man, you guys are awesome. You've been doing very well. Man, you got money in your savings account. You got money in your 401k. You got some stocks. You're like, wow, this is awesome. You could be a business owner. I don't know, you could be a business owner too. And you have money in some stocks with some other company that you took your hard-earned money from your business profit to go invest in the stock market to help somebody else build their business. I don't know if that makes a lot of sense to you. Let me repeat that again. Let me say it slowly so you can listen to it a little bit better. Listen, you're a business owner. You took your profit from your business and you gave it to Microsoft, Bill Gates, Apple, your money from your business that you could be growing your own company, but you took your profit and gave it to those people. Now, if the stock market goes down, your business struggles. Look at all the businesses that have gone out of business today because the market crashed. Their business is suffering because of COVID-19. Now have no money. A different training, a different conversation. We could have that on a one-on-one. But just right now, we're going to paint a perfect picture. Life is good. Stock market, 401k, everything is great. Awesome. And you have a lot of money in savings. So you walk to the bank and you apply for a loan, $100,000 loan. Or $300,000. The bank says, sure, we'll give it to you based on your credit and based on your income. So what they do on your day of your title, you close a deal. You have a great real estate agent. They take a picture, they take a video of you, they put you on Facebook. Everybody claps. They just bought a brand new house. Congratulations, you're happy. Guess what just happened? Boom, the bank took the collateral away from your income because before they gave you the money, they put a lien on your income. They use your income as collateral, and then now they switched it to the mortgage, to the new house that you just bought. But now here's the deal. So let's now go into this other picture. So we bought this house, $300,000 property. So we've done that. Let's bring this down. Now we got this $300,000 property, 30-year mortgage. All right. So let's look at this deal. So we're going to bring 30 years in here. So now we have a 30-year loan. So guess what happens? Let's say the bank says, well, based on your credit, the market is 3%. Your monthly mortgage is $1,265, just principal and interest, not counting taxes, insurance, all the other stuff that comes with home ownership, just the principal and interest. So the interest you're going to pay to the bank is $155,000. And so many of you will be like, man, that's a lot of money in interest. Now, let me ask you this question. Please give me an answer. Please, I'm begging you, please give me an answer. Here's the question. If I came to you and I said, hey, loan me $300,000 And you said, Douglas, you know, I'll loan you $300,000. I said, okay, great. Thank you very much. The next question you're going to ask me, you're going to say, Douglas, when are you going to pay me back my $300,000? I say, you know what? My business is slow right now, but I can pay you $1,265 every month for the next 30 years. How many of you would take that deal? How many of you would do that? How many of you? Please tell me who, if you will do that. Now, let me wait for it, and let me come back and tell you. I wouldn't do that deal. I would never, ever, ever give another human being $300,000 and let them take 30 years to pay me back. I would never do that. That's the terrible deal. That's the worst deal ever. Because I could take my $300,000 and go make more money. You know how many properties I could buy with that? Why would I give it to you? For what? You better be looking to pay me back in 2 months or 3 months, right? And not at the 3% interest rate. We're going to charge you a high interest rate to do that deal. So here's the deal. But the bank is willing to give it to you. Wait a minute. Say that again. Now, understand this. I'm not a fan of a bank for nothing. But guess what? I'm a fan of them for me to use their money at a lower interest rate. So here's the deal. The bank is willing to give you $300,000 of their money. And they say, hey, pay us little bit, little by little, every month, $1,265. But here's what you heard that somebody's told you. They said, man, you're going to pay all this interest, $155,000 in interest? Are you serious? That's a lot of money. You're going to give the bank all this money. And you're like, well, that don't make any sense. And then what do? You said, I'm going to pay extra. I'm going to pay extra. Let's say $1,000 more. So that's $2,265 that you're going to give to the bank, $2,265, so you could pay off the mortgage quickly. So you're paying extra $1,000 a month, so you could pay it off in 15 years. Extra. Come hear all about it. They don't do that show no more. But check this out. Boom. Now your mortgage is done in 15 years, is over. You're paid off, actually 13 years and 6 months, and everybody claps for you. Now, let's say you are 40 years old. Now you're 53. 13 years just gone, and you just give all your extra $1,000 to the bank. The bank, first of all, told you, pay us little by little. But you said, no, I don't want to give you $115,000. Well, you still give them $64,000 in interest, and you give them extra $1,000. So let me show you something. Watch this. I'm going to even use a smaller interest rate. Let's remove this guy right here. I'm going to remove this guy and put 0 here. I'm going to take your $1,000, that extra $1,000. I'm going to even use a 2% interest rate, just 2%, just because I want to prove something to my Dave Ramsey fans and Susie Orman disciples and all those people. I'll put that $1,000 here at a 2% interest rate because the bank is charging you 3% interest. So I'm taking 2%. Now we have accounts that pay more than that, but I'm just using $1,000 for the example. Let me hear it. $132,000 in interest earned, but you say you don't like that money. You don't want that money. You rather take your $1,000 and give it to the bank because you want to have 60. You want to pay less interest, folks. Isn't that crazy? And check this out. In the same 30-year period, you have over $492,000 in cash waiting for you to say, hey, you're 30 years old. What are you going to do? What about 15 years? Well, let's look at 15 years. So we're going to bring this down 15 years real quick. You're going to have $29,000. You're going to have in interest earned and $209,000 cash in your pocket, folks, in your pocket. That's your money. But you said, nah, dude. I'm going to listen to that joker on TV or radio or some other financial advisor that told you to make extra, give up your wealth. Folks, this is your hard-earned money that you running away and giving it to the bank. And look at that. You give them that $1,000 in cash. That's the interest you're giving to them up front. Think about that for a minute. All that extra dollar could have been making money for you, but you choose to do what? Give it to the bank because you like, you know what? I'm not interested in them. I don't want to build wealth. I don't want to keep it. I hate $209,000. I hate $29,000. So I'm going to give it up. I'm going to just put 0 there because I don't even want the money. And boom, I'm just going to pay my mortgage. Now you have a house. Your house is paid off. Let's bring back this guy. Now you have the house, it's paid off. And guess what happens? You don't have any more mortgage because you paid off the house in 15 years. But now you still got to pay taxes, insurance, all those. We go to the courthouse. There's so many properties that's available for sale because somebody couldn't pay their taxes. They couldn't pay even the homeowners insurance. Do you know that homeowners insurance, not homeowners insurance, your homeowners association can put a lien and sell your house and take your house from you? Folks, different conversation, different training. Where is the control of your money? You give up, some of you might even pay cash. Let's talk about those people that pay cash. So they say, you know what? I'm going to pay cash for this. I hate this loan. I don't really want to do 30 years. Why I got to pay the bank all this money? Why I got to do that? I don't want to pay them $155,000. So let's put your cash back here, $300,000. Let's say you have cash, $300,000 and any 2% interest rate. Woo. Look at how the money looks. $246,000 in interest earned. $546,000 over 30 years. If you had the cash, but what happens? You made commission, you made some big sale, you made money, and you got $300,000. And you're like, I need to pay off my house. I don't have, so that somebody could clap for you. Man, I don't want you clapping for me. I need to keep my money. But you do that. What do? You say, I'm going to take the cash and pay it off. Boom. Done. Now, here's one thing. I know we have so many Africans that cannot get a loan because the interest rate is ridiculous. They're raping Africans. They're raping them. They're charging these folks, business owners, personal. When you go to a bank to borrow money from one of these banks in Africa, they're charging them 24% interest rate, sometimes 25. It's ridiculous. 40%. It's ridiculous interest to borrow money. So I don't blame my African brothers and sisters that want to go, that pay cash. But let me show you a way to pay yourself back. All you got to do in today's world, there's internet, right? You go on the internet, you Google whatever bank, you say, if I want to borrow money from a bank, personal loan, how much would you charge me to get a personal loan? So I just take the same 3%. Let's use the same number. I want to teach you something today. Let's say you decide to pay yourself back this $1,265, because when you looked it up and they said in 30 years, $1,265 is what you're going to pay us back. What if I take that and I'll put 0 interest here, and I'll take the same $1,265 and I'll pay to myself for 30 years. I take that $1,265, even if I put it under my mattress. Think about it for a minute. I take $1,265, put it under my mattress every month for 30 years. How much will I have? Oh, what is that? Let me do a roll. I'll come back right here. $455,000 in your pocket by you paying yourself. No interest. All you did, because you know why? The interest is already here, folks. It's already in the monthly payment. Look at that. You could put this in your checking account at the bank. You could put it whatever you want. That's $450. That's the principal. You give yourself back the principal, and you also give yourself back the interest. The only problem is it's going to take you time to do it, but at least you're paying yourself back. Most of us as human beings, what do? When we pay cash for something, we just like, okay, I pay cash, I'm happy, and you just celebrate, and you don't have no money. You're not paying yourself back. Even when you pay yourself back and you say, okay, I'm going to pay myself back, all you're doing is this, because you're just saving back the money. So if I just paid myself back $833, then that's all you're going to do. So if I put $833 here, guess what happens? You just get back the money you put in, $300,000. That's it. You didn't earn any interest in it. So what I say to you is take the money, go online. Like here in America, what I do, every time I pay cash for something, I'm looking at all my Facebook folks. Let's go here real quick. Every time I go online, I want to pay cash for something, because that's something I do pay cash for stuff, but I pay myself back though, and I have my money packed in cash value life insurance. Cash value life insurance. Man, I love cash value life insurance. Just the best thing ever created, and they messed up teaching me the system and this concept, and I know it. Man, I'm loving it every day. But check this out. I just pick up a bank. I just decide which bank do I want to deal with. I just go, let's go to Navy Federal Credit Union. Let's just use them. Let's check them out. Let's check them. Let's see what they charge interest. So I'm going to go to Navy Federal Credit Union and I'll say, Navy Federal Credit Union, how much would you charge me to borrow money from you? Personal loans. I want to borrow personal loan. Can you loan me money for a personal loan? Or can you loan me money for a mortgage or whatever the case might be? They tell you, they give you all the secrets on the online. See that? For 36 months, 7.49%. For 37 to 60 months, 14%. That's on personal loans. Home improvement loans, same thing. Look at all that stuff. See, so every time I pay cash, I go on here and see, I treat the cash as if I borrowed the money for myself. Because there's two things you do when you're borrowing money. You're either paying somebody to use their money, which is when you go borrow money from a bank. That means you're paying the bank to borrow their money. Or you self-finance. When you self-finance, that means you're borrowing from yourself. The problem is most people don't pay themselves back. They just walk away. I don't like that system. I like paying myself back. And I'll take the money from the banks. If they're charging me 5% interest rate, I look at it, I say, okay, 5% interest, how much is it is going to cost me? That's 1,610. I take that money and I put it back into my insurance policy. Because the thing with insurance is the insurance company would never tell you how much interest you have to pay them. They never say that. They never tell you how much interest you're going to pay them. They just say, give us whatever you want. They don't, I mean, they don't tell you what monthly payment, not interest. They don't tell you what monthly payment you're going to pay them back. So with the insurance policy, they also have an interest rate. The insurance companies charge 4% interest, depending on the company you're dealing with. They might charge you 4%. So if they're charging 4%, but you're also earning 4% on your money. So what I do, not only do I go find how much other banks are charging, I take their money and I start giving myself back. The good thing with insurance is the fact that when you pay them back, it's so sexy, it's so ridiculous, man. Listen, I'll do a different training on why when you pay back a loan to the insurance company. But for now, I just want you to see, for those of you, because I know people from all over the world, some of them do in Africa, there's life insurance, but it's not as sexy as the life insurance that we have in America. So it's kind of different setup. Even in British, London, England, they don't have the same type that we have here that is as sexy as what I'm showing you. So man, you all in America, this is great, especially my Black American families, my African families. Listen, we got to take our money and be in control of our money. Stop giving up your wealth. Stop paying extra on debt. Take every extra dollar and save it for yourself. And then if you're plan well and you have it in an account that's paying you a 4% rate of return, guess what, how that looks? You see the difference? That's $537,000 in interest you just earned. Over the 30 years, that's $1 million. Now, some of you might say, I don't have 30 years. Well, how about 20 years? Do you have 20 years? That's $204,000 in interest. That's a total of $590,000 in your pocket. How about 10 years? I don't have 20 years. Well, you got 10 years, right? $43,000. Now, here's the deal. What if every time you have extra money, you add into that deal? Every time you make extra money, you add into that. Every time you have extra money, I have extra money. I pay, instead of giving it to bank, what I give it to my insurance policy. Boom, $2,600. Now I'm $71,384. Extra money. Every time you have extra money, don't give it to the bank. Save it for you. Save it for you. Let me see real quick. How is that going for you? I hope you guys are loving it. I just want to share this real quick and help you so that you can now benefit from this concept. I want you to benefit from this concept. So folks, that's all I got for you. So I hope this was informational for you. And let's see, we got, I just want to share that. So please do me a favor, share, like it, love it, pass it on to somebody. I hope it blessed you. And that's all I got. If you want me to cover some more of this type of conversations for you, any questions you have, feel free to reach out. You could inbox me, because if you're saying this, you could send me an inbox message. We could set up a time so we could help you. My sales agents, they are trained. I train my folks all the time. My financial advisors are doing well. And we're always looking for people to come join us, because we need to change this myth, these lies and lies that we've been told about money from all these so-called guru with all the big titles behind their name. Don't worry about those titles. They're just good test takers. Listen, it's all about common sense, folks. That's all I deal with. That's we have it. And I'm in this industry. And today I know, continue learning, got great mentors that just are killing it. I'm just the guy that just come out and share the knowledge with you. So folks, listen, I love it. Thank you so much for joining. Appreciate you. Again, don't forget to share, like what we're talking about. Have a great weekend and see you at the top. Let's continue being successful. Appreciate you. Peace out.